our Thursday Q&A session. We've got Matt Swart, our senior research analyst, that's going to be talking to us about Sibanye Stillwater. Then we're going to have Sean talk to us about the chart a little bit. And then, per usual, we're going to have some questions, take some questions from the floor. If you think of something that you want to ask, you may as well type it in the chat for us whilst the presentation is going on. And, of course, you can switch on your mic or your camera and just ask it outright when we do open the floor for questions. Thank you for joining us this morning. I'm now going to hand over to Matt. Thank you, Matt.
Thanks, Norrell. And thanks, everyone, for joining this call. Today, we're speaking about Sibanye. We've spoken about it a couple of times, but today's one might be a little bit interesting. So just to touch on what we'll be covering today, Sibanye had a quarterly operating update. However, I don't want to go into too much details about the operations in this presentation, but at a very high level, production at the PGM operations were quite good, 22% higher at the US underground operations, and then flat at South Africa and the US recycling. Gold was 18% lower. That was due to a closure at Kloof 4 and slower than planned production build-up after the seismic activity at Driefontein 4. The PGM prices deteriorated from the same period last year, so 2E, 3E, and 4E basket prices were down 32%, 56%, and 38% respectively. Gold was 11% higher. There's also been a lot of restructuring going on at Sibanye, so that's increased costs. So with lower prices, higher costs, EBITDA was down 75% for the quarter. The outlook for PGMs remains asymmetrically positive, and Sibanye is in a good position to benefit from a PGM price recovery, which I think is on the horizon. But what I really want to focus on in this presentation is the group's balance sheet. So commentary from the latest update from management suggested that they were engaging with their lenders to temporarily raise debt covenants. So I'll share some thoughts on that, but for the time being, Sibanye's got sufficient liquidity to meet its debt obligations. Of course, the longer that PGM prices remain depressed, or if they deteriorate further, then the bigger the risk becomes. And then finally, we've trimmed our target price slightly. We've kept our recommendation the same, which is a hold for now. So just starting with the long-term debt by maturity, which is depicted on the screen. There's about 4 billion of a 5 billion rand credit facility that is due to be repaid by the end of this year. That's shown in the blue column. Firstly, Sibanye's got 25 billion rand in cash and cash equivalents. Then they've also got an undrawn $1 billion debt or credit facility, and that gives the group sufficient liquidity and flexibility to repay the outstanding debt if they choose to repay it from cash balances. Then I'll also just point out that the grey bar near the 2028 number is the convertible bond offering that was just launched now. That might be settled in shares, not cash. So the main takeaway from this screen is that the debt is loaded more towards the end of the decade than in the near term, and that affords Sibanye the ability to get through the bottom of the cycle. Then just looking at the estimated borrowing costs going forward, they're going to increase significantly from the last financial year to the next one. Most of this is primarily due to the addition of the newly issued convertible bond. That was $500 million, and partially due to higher rates and a weaker rand. Remember that the fixed the convertible bond pays a fixed coupon of 4.25% in US dollars. So I've tried to stress for interest rate changes. As you can see by the different shades of gray, it's not sensitive to rate changes up or down. It's because the majority of the debt is fixed. So approximately 65% of the debt is fixed, and 80% of the debt is also denominated in US dollars. And then one final point is that the revolving credit facility that matures at the end of this year is floating. So the fixed cost debt as a percent of total debt outstanding might increase depending on how they choose to repay the RCF. And as I said, Sibanye's, they mentioned that they're engaging with lenders regarding the debt covenants. So on this slide, we show the covenants relating to leverage. You can see that Sibanye is well within the leverage covenant, which stipulates that net debt to adjusted EBITDA must not exceed 2.5 times. That's the dotted red line. And Sibanye's got sufficient cash on its balance sheet and has net debt to adjusted EBITDA of 0.58 times. So for the time being on this covenant, they're okay. Then the covenant relating to liquidity, that states that adjusted EBITDA to the net finance charges must be greater than 4 times. So for 2023, that ratio was sitting at 17 times, but it's clear that the ratio has come down a lot from 2021 as PGM prices have got worse. So our current estimates indicate that this ratio will go to about 9.9 times in 2024 and thereafter increase to about 12.5 in 2025. But this is largely dependent on a recovery in PGM prices. The more prolonged this depression is in the commodity environment, the bigger the risk is. And then we have basically estimated that if the PGM basket, if the prices fall by 30% from current levels for 12 months, that'll put this covenant at quite big risk. And just back to PGM prices, so the biggest driver of Sibanye is the PGM prices. As you can see here, they are at quite depressed levels. For those of you who are regular on these calls, you'll know I show this graph all the time, and I always show it to emphasize the inverse relationship between platinum and the US dollar. As the dollar weakens, one would expect the platinum prices to increase, and the catalyst for the dollar to weaken will likely come from interest rates getting cut. And I think that will be the catalyst for an increase in PGM prices. I also show this one quite often. So it just shows the performance of the 3 major PGM producers versus the basket price. So you can see that all 3 producers have underperformed the basket price. So if there is a recovery in PGM prices, one could expect that the PGM players will outperform the basket price on the way up. Yeah, so there is that opportunity. And then finally, just on the valuation, so we've got an intrinsic value of about 25 Rand. See, it's been hit today. But our ranges between about 20 and 28 Rand. And Sibanye has been hovering between those values for some time now. We're watching Sibanye very closely. The interim results are going to be very important. And then we are in the camp of a positive PGM outlook. but must highlight that the risk for Sibanye certainly increased from 6 months ago due to the PGM prices and the increased balance sheet risk. That's it from my side. I'll hand over to Sean now for the technicals, and then we can go into some Q&A.
Yeah, good morning, everybody. Yeah, you can see the chart here. That's yesterday's close. So you can see the share price of Sibanye is trading just below that 200-day moving average. And the long-term term remains bearish. In the medium term, you can see the share price is just trading just above its 21-day and 40-day moving averages. And I would say that the trend is slowly turning bullish there. Saying that, in the shorter term, the share price is testing that near-term resistance level around about that 23.60 level, which is just below the intrinsic value that Matt just referred to now, the 24.50, and hence our hold recommendation. I see that today the share price has jumped up for nearly 6%. It's trading around about 25.10. And so it has broken above that resistance level, as I seen on the chart from yesterday. So it could push a bit slightly higher, maybe to test that 200-day moving average, which is about 25.20. As you can see on the chart there, there's quite a strong resistance zone between 25.90 and 27 Rand price levels. You can really also, you can see at the bottom there the MACD indicator and the stochastic indicator. The MACD indicator has just moved into overbought territory and is trading just above its trigger line, so we give it a bullish signal. But the shorter term stochastic is already trading in overbought territory, and today looks like it's going to turn. So I don't anticipate much more upside from where we're seeing now. But as I said, it has moved a bit higher and might retest that 200-day moving average. Short, thank you.
Thank you, Sean. Yeah, what's that previous pivot high there? The top red lines are about 27.5. I think it could actually get there. If you look at what's been happening down the right-hand side with your upward sloping trend line. And just for the audience sake, for those guys who aren't technical exponents, Sean quotes the stochastic, but I mean, the stochastic can stay in overbought territory for quite some time when the share price moves up. It's not necessarily an indicator that it's about to turn. It's just an indication that on the technical side of things, the thing has started moving up. So yeah, with the thing breaking up above that little short-term resistance, almost trading against the 200-day moving average, Sean might be right, and it might hang around here for a while. I have a question for Matt, and I'll kick it off before we go to the chat. So Matt, you're saying we're expecting PGM prices to go up. We think Sibanye has a lot of cash to actually settle their debt. But if prices remain subdued as they are, then Sibanye may hamper their future ability to pay debt. And that's your concern.
Yeah, well, at this stage, the concern is more about the liquidity than the ability to pay debt, because they do have a large cash balance. But obviously, the longer that the PGM prices remain low, the more that puts the ability to pay debt at risk.
Okay, so you're saying that the low price is going to eat into the cash?
But yeah, it will.
Okay, I get it.
Yeah,
I get it.
Okay. Which is not so that in itself is not a concern in the short term.
Mm-hmm.
It's more whether they are not able to meet their debt covenants.
Okay.
Which the covenant specifically relating to liquidity, which is your EBITDA to borrowing costs. Yeah.
Okay. Thanks, Matt. Raj says, what is the outlook for Anglo Plat with the Anglo restructuring and proposed unbundling? You did do a small little comparison between the companies there, but do you have a view on Anglo Platinum?
Yeah, so I guess the outlook, it is quite uncertain. Just because, not quite sure on the timeline of, how they're going to demerge or unbundle Amplats. They also, at the same time, lose like the, they lose the backing of being part of a bigger like mining conglomerate. But they have said in the Anglo presentation that they're not getting rid of Anglo Platinum because they think it's a bad asset. They still think there's opportunity within PGMs. It just doesn't fit into their vision of taking Anglos forward. But I still, at this stage, it's too early to say because there might be another offer from BHP, although that possibility does look like it's getting smaller. There could be another bid from another company. So it's all up in the air at the moment.
Sorry, I'm talking over a muted mic. Sorry.
BHP does have until the 22nd of May to come up with something firm and final.
So that's Wednesday next week. Okay. I don't see any other questions. Clive says thanks for the great presentation. Leo's got his hand up. Yes, Leo, go for it.
Yes, I'd like to ask Matt, at what platinum price in USD would Sibanye be out of the woods, so to speak? Is it another maybe 1,200 or, I don't know, 1,150?
Out of the woods as in out of trouble?
Yeah, just,
Yeah, I think, if they can stay around, at least stay around these levels, that'll be okay. If they get, as I said, I think if the basket were to decrease by about 30%, I think by my calcs, that's when they're gonna that might put that liquidity covenant at risk. But it's also got to stay low for 12 months. Then I mean, obviously, I think it is geared towards at the moment, the biggest drivers of the PGM prices. So, like you saw today, that's up 6%. Platinum and palladium are up like 2 and 3%. So there's a little bit of gearing there. But anything above these levels will be positive for all the PGM players. But I don't have a specific number.
And also, I'd just like to ask you, the contribution from its gold mines, is it minor?
It's not minor. I think it's in the 20s. But by far it's Sibanye moves with platinum. So even like if you see the like on the days that the gold producers do well, Sibanye doesn't move with them and moves with the platinum players. So even though they've got a fairly big portion of gold, it's primarily driven by PGM prices.
Okay, thank you.
Well, thanks, Matt. Then let's see. Vessel says, could we have a presentation on Anglo in the near future, especially with all the bids and so on? Vessel, I'm sure we've got a schedule that we try and stay to, and we typically try and involve the companies that our clients have a lot of exposure to. Anglo is one of them, but we are reliant on the analysts' time to do work for us, and then obviously for the portfolio managers out there. And I'm sure that once we've got details of a deal and there's more certainty, they will analyze it to put a view out for the portfolio managers in the group. And I'm sure we'll have access to those documents that we may not have a discussion session, but we can always try. Let's see, Dennis says, would Northam then be a better bet to put money in? There's a straightforward question for you, Matt. If you were a betting man, Northam versus Sibanye?
I guess that depends on your view of platinum. Platinum in the PGMs.
Yeah, if you're going to wait for
the reason initially that we liked Sibanye was because they were kind of diversifying into different areas. So they, as I said, they've got the gold. Previously, Sibanye was a gold company, and they got into PGMs at the right time and did very well. And then they're kind of pivoting towards battery metals. So out of the PGM producers, Sibanye are pretty diversified, both in terms of what it actually mines, as well as geographically. Whereas Northam is a pure platinum player in Southern Africa.
Cool. Thanks, Matt. We've got a question here. Somebody's asking on behalf of a friend. It's an unknown user. I don't know who this is. I suppose the intrinsic price is not 47 anymore as the company update report from August 23. Is that because of the PGM prices? Matt, I'm sure it is. You can...
Yeah, absolutely. So, but trying to forecast these things, we rely on, the biggest inputs are production, prices, exchange rate, and costs. And of those, the one that's been hammered the most is platinum prices. So that's what, as the platinum prices come down, we've been forced to bring our fair value down.
Okay. Yeah.
I can't raise it until we've got a view on PGMs, which is positive, but predicting the prices, it's so difficult to get right.
Okay.
So that's why we lean towards either positive or negative skew.
Yeah, we have to put a stake in the ground at what we see at that moment, and then take a view and say, well, based on this scenario, this is what could happen. And in this case, yes, there was a more bullish view, but these platinum prices just haven't come through. So it's the same with today's presentation. If we're going to wait for a while, then as Matt has stated numerous times, there's going to be more worries here. And if the platinum prices do take off a little bit when the dollar weakens as they cut interest rates, then obviously we'll see a bit of upside. But certainly today's move is quite positive. And as I've stated on the technical side of things, could probably get to about 27.5 before it hits major resistance. Clive, you always catch me with this one. Sean, what's up next week?
I think it's Old Mutual.
Is it?
Yeah.
And that's Pierre. Yeah, lekker. Okay, so we've got Pierre back next week with Old Mutual, so we'll be talking financials again. Any other questions on the Platts for Matt? Don't see anything. Well, thanks, Matt. It's a very comprehensive presentation. It's insightful and to understand the way that you oaks think about analyzing these companies to determine if there's any value for a share portfolio is valuable to us as well. So thanks very much for your time and effort and talking to us today. Sean, thanks for your technical side of things, and we look forward to hosting you guys next week, Thursday, to talk to Pierre about Old Mutual. Have a lekker Thursday. Cheers. Bye-bye.
Thanks, guys. Cheers.